Hello and welcome to this edition of the video market update from Orbex.com, and happy Eid to all of you. It was a light week last week with few economic releases across the board. However, the US dollar rally has stalled at the end of the week, sending the US dollar index back below the 97.50s. However, the main story of last week was in crude oil, as it continued also to slide further. Brent is now already declined to the lowest level since November, while West Texas crude is now at the lowest level since August of last year, despite the fact that the US crude oil inventories has been declining for the past 3 weeks. Moreover, crude oil also has entered a bear market, as it dropped by more than 20% from this year's high, and most of the 20% decline was only during the month of June. This is all despite the fact that OPEC has decided to extend December's deal to March of next year. This is exactly what we were talking about right after they announced their decision, and we noted that extending the same deal that failed to push the prices to new highs of this year will not support the price once again. This also shows that crude oil needs more actions and not only remarks. Therefore, the recent decline in crude oil is likely to push OPEC and non-OPEC members to intervene once again, first of all through the media by increasing the hopes for deeper cuts in the coming meetings. And the question remains for the time being, will the prices react positively to such remarks? For the time being, I would doubt it, these kind of possibilities, but time will tell. Back to the US dollar and the US dollar index again. Many of the Federal Reserve members noted last week that it would be reasonable to wait until the end of this year to assess the data before deciding on the upcoming rate hike, while none of them gave us any kind of new info regarding trimming the balance sheet. And this is why, for the time being, we keep our bearish outlook unchanged for the US dollar, and we will talk about it also the levels that we need to watch later in this video. As for the fundamentals during the upcoming days, there are some economic figures which may have a notable impact on the market this week. On Monday, eyes will be on German IFO business climate, in addition to the durable goods orders in the States. On Tuesday, we'll be watching also the Bank of England financial stability report. In addition, also to the Bank of England Governor Mark Carney will be speaking on that day. Moreover, during the U.S. session, eyes will be on the U.S. consumer confidence, and most importantly, the Federal Reserve Chair Janet Yellen is due to speak about the global economic issues at the British Academy. Wednesday will be all about central bankers, as we will be waiting for the remarks from many of the central bank's chiefs, including Bank of Canada, the European Central Bank, the Bank of England, and also Bank of Japan. Thursday, we'll be watching also some inflation data from Europe, including Germany and Spain, while the final GDP data will be released also from the US. Finally, on Friday, we'll be watching some data from Asia, including Japan's inflation, China's manufacturing PMI, and non-manufacturing PMIs as well. In Europe, we'll be watching also the German retail sales, UK final GDP, and the current account. But most importantly, the Eurozone figures, or the Eurozone inflation figures, will be released, which is likely to have the biggest impact on the market. Finally, during the US session on that day, we will be watching some data from Canada, including the monthly GDP and the retail price index. And eyes will turn to the US core PCE price index, which is very important to show whether if inflation is really declining according to the latest decline in CPI and the core CPI, the year-over-year core CPI in the States. Moreover, we're waiting also for the personal spending, personal income, and Chicago PMI. So this is the fundamental part of this video, and now let's have a look at some technical charts for the one that we've been talking about for the past few months. Beginning with the US dollar index, as always, and as I said before at the beginning of this video, but the rally that we began at the beginning of last week has stalled in the middle of last week at almost 97.70s and continued to break all the way back down. And this was due to some fundamentals, in addition to some of the Federal Reserve members' remarks regarding the next rate hike, which basically eased a lot of expectations, or a lot of the estimates that thinks that the Federal Reserve might raise rates 2 more times this year, or even 1 more time, because many of them noted that there is a possibility to wait until the end of this year to reassess. However, for the time being, there is still a possibility for another spike higher, all the way to retest the 98 area and the 98.10, which is the 50-day moving average on the daily chart. However, I don't think so. This would be the case next week. At the same time, there's a shooting star, or a reversal candle on the weekly chart. On the weekly chart, a reversal candle, this, or some sort of, we can say it's a reversal candle on the weekly chart below the 100-week moving average and the 200-week or 100-week and the 50-week moving average. That's why I still keep the bearish outlook unchanged, at least for the next few days, or at least for the next week. The next level to keep an eye on, where there's a possibility to retest, is basically the 96.50. Going forward with our the rest of the technicals, basically, or starting with the New Zealand dollar. Last week it failed also to retest the 73.05, despite the fact that the Reserve Bank of New Zealand kept the rate unchanged at the same time, with some hawkish remarks or positive remarks about the economy. However, I still believe that we might see some sort of a selling off below the 73.05, 73.10 in the next few days, especially that also technical indicators are on our side, heavily overbought, crossing over to the downside. I still believe that we might see some sort of opportunity to short the Aussie, or the Kiwi, sorry, with a stop below or above, sorry, the previous 2 weeks highs. The Aussie failed also to continue higher. We had actually a gap lower last week. At the same time, we covered the gap, but we ended the week lower, above the 50-week moving average. But still, there's still a possibility for, I would still wait for the Aussie to reach around the 76.70s or 77.20s before the downside continues. Especially technical indicators are still not heavily overbought on the weekly chart most time frames. So I still believe I would wait on the Aussie, but I will be interested to go short with the Kiwi. The euro also made a very interesting rebound all the way back to almost 112, but failed to break above the 12 at the end of last week, sorry. 112 remains a very strong resistance for the time being, but at the same time, 1130s is a solid support for the week ahead, which you need to keep an eye on. At the same time, I still believe that the euro might even test the 1250s, and even with the possibility to test the 11280s this week, especially the technical indicators are also on our side, heavily oversold and crossed over to the upside. This would keep the positive outlook for the euro for the time being. The British pound made it to our target, which was the 100-day moving average, and rebound all the way back up due to many factors also during last week. But at the same time, this is likely to be very limited, despite the fact that the US dollar index outlook is still bearish. But the Bank of England and most of the Brexit talks is likely to keep the pressure on the British pound in the next few days. Any upside rally is likely to be limited below 128, 127. 80s to 128 before the downside continues, maybe probably toward 125 50s in the next few days. Dollar yen failed again for 4 days in a row to break above the 100-day moving average, and is still in a very tight range between the 100 and the 50-day moving average. Technical indicators are heavily overbought, and the RSI is kind of flat above the 50, but the moving averages are narrowing to each other, which basically means that we are very close to an explosion in the prices, meaning whether it's on the upside or the downside. But I still prefer the downside more than the upside, as long as it stays below the previous top, which is around 114, far away. But at the same time, as long as we're below the 112 and the 100-day moving average, I still believe that we have a possibility or an opportunity to decline all the way to 109.95 or 110 and 109.10. Finally, gold and silver. Gold made its very important, very interesting move as it rebounded right from its uptrend line that lasted since the beginning of this year. Last time we tested the trend line, it was all the way in April, at the beginning of May, at the end of April, beginning of May. At the same time, right now we're seeing the same thing, but we need to break above the 50-day moving average at the same time to give it more and more strength in order to break all the way back higher. I still believe the 1260, 1270, that will be the next level to keep an eye on in the next few days. Silver, we're not going to talk about it that much, but we had some sort of a pickup in the past few days, the past 3 days, especially Wednesday, Thursday, and Friday. Technical indicators are heavily oversold and crossed over to the upside. At the same time, the RSI started to go all the way back up, but still, I still need to see silver proving itself more and more in the next few days above the $17 in order to give us more and more sign for another rally ahead. Otherwise, there is still a risk for another leg lower, probably toward this trend line here, which is around like 16.20s. Otherwise, I still believe there is a possibility for an upside ahead. This is it for today. Thank you all for watching this video. Please like and share and subscribe also to Orbex channel to get the latest. If you have, of course, any questions, please leave it below the video on YouTube. I'll see you once again next week. Happy Eid, and I'll see you once again next week. Have a good one.